All right. Good day, great folks. We're going to look at what we call income tax tables. This is one of the questions that really great folks find difficult. I'll start by explaining what we use it for. We shall always use it when we are calculating what we call income tax. Income tax can also be represented or replaced by what we call pay as you earn. Anyway, as we calculate taxable income, as we calculate income tax, first and foremost, we need to take note of some items. All right. Item number one, we need to know the person's age. Age will be vital. Then we need to know the person's amount of money that the person gets, which is the income. Then we need to, from these two, we shall be able to start. Then why do we need the age? Age, we shall use it to determine which rebate the person belongs to, all right, or threshold. When you look at threshold, this is the determinant. This is the determinant. What does it determine? It determines whether one will pay tax or not. All right, we shall see as we go on. I'm using some tables down here. These are the thresholds. This, we say, it determines if one pays tax or not. Yes, sir. But then how shall we tell? Should the annual income of someone equal to this number that you see here? Because now these are different numbers because of different years. But should the income equal to the amount that you see here, the person should not pay tax. Should it be equal or less, the person should not pay tax. Person should not pay tax. So we shall be doing that as an example. We shall say here. Let's take an example here. A person is 60. A person is 64 years of age. They earn, let's say, 5,500 per month. So we want to know if the person's going. We need to know to determine if they pay tax. First and foremost, the person 64 years of age, keep it aside. How much does he earn? He earns 5,000. So what we're going to do, we shall take the values, we multiply by 12. 5,500 times 12. So the person at the end of the year, person has 66,000. Are we there? Let's take it to be, this year was 20, let's take it to be 2019. The person earns this in 2019. So we shall come here. The person is 64 years of age. So when we come to the table, we shall see we are here, 64 years of age. So the person is here. So I'm here looking at that number. I'm here looking at the number because the person here is, the person got 66,000. So this number is below the threshold. The person does not pay tax. How do you prove that? We come now, ask ourselves. We shall ask ourselves, which bracket does the person belong to? Which bracket does the person belong to? We shall go. Let's find out now. When I talk of which bracket, I'm looking at this table here. So definitely the person belongs to bracket number 1. Are we there? So we shall say 18% times 66,000. So the person has this much. Then we subtract the rebate. Remember, is 64 years of age. The rebate is now here, 2019. The rebate is 14,000. 14,000. 14,069 rands. I'm saying this, you will have a negative number. Person have a negative number, which is 2,187. Negative. So, person does not pay tax. Does not pay tax. That's how we say it. Okay. And I think we need to know, when we look at these tables, we've seen the rebate. This is what? A tax relief given by the government. Tax relief. What does it do? It reduces on the tax one would have paid. It reduces on the tax one would have paid. Tax rebates and medical tax credits, those they reduce on the tax one would have paid. When we are calculating threshold, we use just to determine will the person pay tax or not. Are we there? That is it. So rebates, these are given, or it's a relief given by the government to taxpayers, and we subtract it from all the tax that a person has to pay. Together, subtracted. Another thing you have to take note of: primary is for all the people. Primary, everyone qualifies for primary. But then, if the person exceeds, if the person is 65 to 74, that means you subtract 2 values. If the person is beyond that, for example, 75 and older, you subtract all the 3 values. We shall see on as we go on. All right. Another thing we would like us to look at, I'm trying to interpret this table a little bit. We have these values here. These values. These are the maximum annual tax paid from the previous, whereas it's the minimum in the current bracket. Maximum from the previous, minimum in the current bracket. But then how do we get them, or how are they determined? For example, how was 67,144? This comes from bracket number 2. So it's maximum in bracket number 2, minimum in bracket number 3. But then how was it go? So since it comes from bracket number 2, you will say, you will come here to bracket number 2, 37,062 rands plus 0.26. The 0.26, I took this, I divided it by 100. I get a point like that into brackets. Now, into brackets, I'll take the maximum number here, which is this. I'll write it here. Then 600 minus the number I found here. So when you put this in your calculator, straight away, please, you put everything. You put everything. You will end up having the same number as we see it in bracket 3. So it comes from bracket number 2 to come to bracket number 3. Take note of that. All right. You can also try another one. All right, we come back to this and we say, um, how was this one determined? The one in bracket number 2. It's the maximum in bracket number 1 and it's the minimum in bracket number 2. Anyway, we shall say this value here comes from bracket number 1, but which will be so simple. 18%, which is 0.18 times the maximum number here. One would ask why aren't we subtracting? We are not subtracting because it's this equation is different from these other ones. These ones have taxable income above, but this one just has taxable income. So we do that. 18 times 205,900. We end up having the answers 37,062. Look at that. That's how we get these values. Let's try this, the last one. So this bracket comes from bracket number 4. Comes from bracket number 4. So we shall say 105,429 plus 0.36 into bracket the maximum number that you see here. Which is this number here. All right, that's how we do it, and that's how we use the, okay, that's how we determine the values that we have here. welcome. Let's look at this scenario here. As I told you, the scenario will always provide you with the age and the salary the person gets, or an income the person gets. It has, before you do calculation, the amount has to be annual. All right, let's look at this. Explain what the tax threshold for 65 years and younger means to taxpayer. Remember we said this will be used to determine, it's used to determine if one pays tax or not. Together. That's what we use. We use the threshold to determine whether one will pay tax or not. Now here they're asking us, we need to calculate annual taxable income. Annual taxable income. Let's come here. When we look at taxable income, taxable income will always be the gross someone gets. I'm talking of the gross income. This is the total income that you earn minus the non-taxable income. They are called tax deductibles. All right. Non-taxable income. And this will include your pension. If one pays pension, we subtract it from the gross. Then if one pays road accident fund, we also subtract it. Then we also subtract of what we call, if someone pays donations, someone the donation you pay to a certain charity, we subtract it off before we start what? Calculating the taxable income. All right. Well, simply meaning for you to start calculating tax, the money has to be taxable. Are we there? The money has to be taxable. Take an example, simple explanation here. Someone gets that much money, we call it a salary, but part of it is not taxed. So this is what we call the non-taxable income. No tax comes from it. No tax is deducted from it. No tax is deducted from it. So let's go to the question that we had here. Mr. Singlove, who is 85 years of age, or 58. Mr. Singlove, who is 85 years old, earns a monthly income of 60,000 each month. She contributes the following from her monthly income. She contributes medical aid for herself, her husband, and two children. Then 75% of her basic income, which is contributed to pension. The 1% of her basic income is contributed to UIF. Maximum, UIF, it's always 1% of someone's income, but it cannot exceed a certain amount. Now, for example, here it was 148. So you cannot exceed, even though, because 1% of this would be around 600. 1% would be around 600, but the person only qualifies for person only qualifies for 148 rand 72 cents because it's a maximum UIF. Anyway, let's calculate the tax. Oh, sorry. First and foremost, we need to look for the taxable income. So we say, remember, we say taxable income will equal to the gross minus pension. Because I'm seeing here this as pension, no medical aid. So here it will be gross minus pension. Okay, let's do that. And you see, remember they said annual, so we shall multiply the answer by 12. Okay, now first and foremost, the gross we say is told you 60,000. Since we are looking for pension, we shall come and subtract minus 7.5% of the basic income multiply everything by 12. You end up having 666,000. So this is the taxable income. Okay, so yeah, they say determine Mrs. Ntov's annual medical aid tax credits. I will always write them as MTC. MTC, sorry. MTC. So this one will depend on the number of dependents. We saw she pays medical aid for herself, that's one, for the husband, two, and two children. So the family has 4 people that are on medical aid. So we shall go and check on the table where medical aid is. Let's go there and you see. Medical tax credits are like this. Together. So there are 4 people. Simply mean the main member, who is Mrs. Ndlovu. Mrs. Ndlovu, she will take the same amount. Also, the first dependent will take another amount. Each additional member will take 215. So here, allow me to do this. This will be this much. Those 2 people will share the same amount. Plus the other 2 are remaining. Everything has to be multiplied by 12 because it's annual. Which is 12,816. We come back here. See, we said it was 2 times 319 plus 2 times 215. Everything became 12,000. Sorry, multiplied by 12 because we are looking for annual. Became 12,816. This is medical. Also, this one will act, it's added onto the rebate. You understand? It's a relief for those who pay medical, for those who pay medical aid. Mrs. Ndlovu stated that her monthly tax contribution, take note of that. She's looking at monthly. Yet for us, the values we're dealing with are annual, simply meaning you look for the annual tax paid divided by 12. All right? Then we shall say the person says the monthly tax contribution is 9,111 rand 75 cents. Verify showing all calculations. So we need to know. First and foremost, we know the taxable income. But which bracket does it belong to? Which bracket does it belong to? We shall come to the tables here. 666,000. It's in bracket number 1, 2, 3, 4. It's in bracket number 5. So we shall say we shall take this. The moment you identify where it belongs, which is this bracket here, you write this number here down, plus 0.39 into brackets. Now you bring the taxable income that you've just got, which was this much, minus the number which is already inside the bracket. Calculate everything, put it in a calculator. Comes 18,000. Sorry, becomes 187,407. Now here, this is when you subtract the rebate and you subtract the medical tax credit. So it's that much minus. Now the person was 58 years of age. So the rebate which year are we using? Let's use 2021. So the person qualifies for 14,958 minus the tax credits that we've just seen. Subtract everything. You have 15,000, sorry, 159,633. Because this said the monthly, we shall divide it by 12. So her claim is what? Invalid. Then. This is a good example. Let's see this. The person called Joy. Joy is a 52-year-old nurse who earns a salary of 286,500 per annum. Take note of that. Per annum. Joy, she earns per annum. So simply meaning this is the money the person earns in a year. You understand? And she contributes 7% of the annual salary to pension. So part of this money, 7%, goes to pension. On top of that, she only has 2 daughters listed as dependents on her medical aid. She is concerned that 4,000 rands monthly income tax deduction is too much. So we want to verify whether the concern is valid or not. Does she pay that much money? Anyway, number one, what you're going to look for in this scenario, take note. They have talked of the annual salary. They never told you it's taxable. And they have talked of 7% pension. So what you're going to do first, you need to look for taxable. Look for the first thing you do is to look for taxable income, which we said equals to the gross minus the tax what? Deductibles. Together? Tax deductibles. Now here we only have what? We have pension. We have pension. All right. So since we have pension, so what we're going to do, number one, we shall say 286,500 minus 7% of the same money. Why are we doing this? We are removing pension. Or you can say you reduce this by 7, whereby you multiply by 93 over 100. How do I get the 93? 93 comes from 100% minus the 7%. We all get the same answer as, we both get the same answer as 0, we get the same answers. 266,445. So this is now the taxable income. Next step, look for the bracket now. Where does it belong? First step, we looked for taxable income. Now we need to look for the bracket. The reason why we look for the bracket, because you're going to calculate tax. Start now calculating tax. It's called tax payable. Tax paid or tax payable. All right, which bracket does she belong to? We shall go to the tables. We look for the bracket. And we see that she belongs to bracket number 2. She's here, around here. This is the bracket where she belongs to. So we say 37,000 and 65 rands. That is, sorry, and 62, not 65. And 62,000 plus the 26 that you saw there, 26%, which I will write like this, into brackets, the taxable income you've got now, minus, someone would ask us, oh, the first example we multiplied by 12. Here we cannot multiply by 12. Why? Because the money is already per annum. All right. So we come here, minus 205,900. 205,900. All right. At this point in time, we come and calculate. We come and calculate the values. You put this in a calculator, please. Put this in a calculator. So you end up having the answer as so in this time, we need to subtract the rebate, and we also need to subtract the medical tax credit. We go there and you see, remember, take note. They did specify the year. Okay, here we shall remain with the first number, 2021, as from the table. Go to the tables. Now we are in the rebate. We shall stick to this. We shall stick to the rebate. The person is 50 years of age, 58, 52. So the person is 52, so she belongs to the primary, which is 14,958. So we need to come here. Get that answer that you have there. Minus 14,856 minus now the medical credits. The medical credits. The medical credits. 958. The medical credits, we're going to look at how many numbers repeat we have. We said there are three. Two people will share the same amount. We come here. Two people will share the same amount. Remember how we did this? These were four. So the first two people will share the same amount, and the last one will take one amount. Don't forget, we need to multiply it by 12. So here we come and say 2 into 3, 1, 5 plus 2, 1, 5. Is it 3, 2, 1? Yeah, 3, 19 and 2, 15. It's supposed to be 19. Who only affects this because there are two people, Asof and the first dependent and the other dependent. So everything here has to be multiplied by 2. Please, the 12 is only multiplying this bracket here. Okay? Subtract these values here. We subtract, we have the answer as 27,609, so 27,609 rands, 70 cents. Remember, it's month, the 4,000 is monthly. So we shall also divide by 12. Look for the monthly amount, which becomes 2,000, 2,000, and indeed, the claim is valid. The claim is valid. The claim is valid. Her claim is valid. 4,000 is too much. But yes. Hmm. Hmm? Good one. Hey, ubu no bade nkucha makati ne. Nzamani ereketo bani bani.
Mulimu ababa. Mbadde njagala kuleetera ente gye baakoze.
Na bali bavuddemu abalala. Kubanga gye nkoze badde ku gundi ku systems. Gireete tulabe. Tujja kutambulawo mpola mpola tulabe ki ekiri. We shall say the answer is valid because she claims she pays 4,000. And indeed, she's supposed to pay 2,380 cents. All right. Look at the second question here. This person, okay, this is 1st March 2020. So we know the year, we know the age. This is his job that he does. All right. With a starting salary of this much money per year. Data appointment says that he's entitled to a bonus. Very good. Refer to his incomplete payslip below and a tax table on annexed year A and answer the questions that follow. Number one, all I want you to take note of that once you're asked to perform or to calculate tax paid, you have to take note. Now, in this one, tax paid, we shall see the amount they have given us. They have not told us whether it's taxable or not. Another thing you have to take note, he has a bonus. What you have to know that bonus, we don't subtract what? Pension. But either way, now what we're going to do, tax paid, we shall look first and foremost, taxable income. But now here in this scenario, this becomes his taxable income together. But now this is per year, then including the bonus. You understand? Now, starting this rate of premises that he is not entitled to a bonus. Very good. So here we go. So this money becomes his taxable income, straightforward. And we start calculating his tax. So now this is taxable income. We are not going to remove pension. Why? They never mentioned anything to do with pension. You go straight forward. Now, when we look at the tables, this will be bracket number 1 straight away. That's what I see. You see? It's in bracket number 1, which will state 18% of 168,000. The answer becomes 30,240. We subtract rebate. We shall not subtract any medical tax credits because they never mentioned anything to do with the medical aid. All right, we shall subtract 30,000 minus 30,240 minus the rebate, which we saw already, which was 14,958. So the person has annual tax paid as 15,282. This is monthly. Sorry, this is annual. So if you need monthly, you divide that by 12. So per month, the person pays 1,273.50 cents. This is per month. All right, we go to another last example here that we have. This is interesting a little bit. All right. Verify with necessary calculations that Yamkela's tax that he pays per month is more than 6,850. Number one, let's look at the person. We have the year. Very good. The person receives this much salary, but this is per month. Okay. The moment you hear it's per month, that means you're going to multiply by 12 somewhere, somehow. He contributes 7.5% per month towards the government pension fund. You understand? Which is tax deductible, meaning you have to subtract it before you start calculating tax. Then he also donates. Look at this. This is per month to a charity organization. Donation is also tax deductible, meaning we need to remove it before we start calculating tax. First and foremost, we need to determine taxable income. Why am I looking for taxable income? They talked of gross salary. They didn't talk of taxable income. Number two, they talked of pension. They talked of donation. So I need to determine the taxable income. So it has to be 37,000, which is the gross, 537 rands, 50 cents, minus 7.5 of the same money, still minus the 575. Everything will be multiplied by 12. Why by 12? We need annual taxable income. All right? Annual taxable income. So the annual taxable income becomes 409,766 rands, 25 what? Cents. Second step, we go to we determine the bracket. We determine the bracket. Which bracket does it belong to? Let's determine the bracket. We say the person has, it's bracket number 3. Bracket number 3. Bracket number 3 says you take 67,144 plus 31%. It says in bracket number 3, which says 67 minus this value here that you see, 321,600 minus 321,600. Let's subtract the rebate. Shall not subtract the medical credits because they never talked of medical credits. Remember, the primary rebate was 14,958. Subtract that. You end up having this much money. You may ignore the so now this talked of per month, we divide by 12. So we say it's what? They say pays more than no. The statement is invalid. It pays less. Thank you very much for your time. See you in the next lesson.